Although last session the price of gold fell below 1,800 United States dollars per ounce after 4 days trading above 1,800 USD per ounce. However, this is only an adjustment to accumulate more for the new price increase. Gold price is having a resistance at 1812. For 4 consecutive days, the price of gold has not been able to surpass the 1812 level. This is the reason that the price of gold has retreated below 1800 to accumulate and surpass 1812, towards the landmark 1840, 1860, 1900. The current support level is 1780. Macroeconomics is not good. U.S. and China trade tensions continue to rise, the U.S. Federal Reserve continues to pump money causing stock bubbles and high risk of inflation. These are the reasons for the gold price to continue to rise in the coming week and for the rest of 2020 and 2021. Here is some detailed analysis of the reference gold price. Gold down over new COVID-19 vaccine hopes, continued stimulus in Europe. Gold was down on Friday morning in Asia over new hopes for COVID-19 vaccines coming out of both the US and UK, and the European Central Bank (ECB) signaling that it may leave interest rates and stimulus unchanged in the near future. Gold futures were down by 0.12% to $1,798.15 by 10:34 p.m. Eastern Time, 3:34 a.m. Greenwich Mean Time, retreating below the $1,800 mark. European Central Bank President Christine Lagarde said at the ECB Governing Council meeting earlier this week that the ECB deems monetary stimulus in Europe to be necessary in the near future, fueling investor risk appetite. In the U.S., Moderna, Nasdaq, mRNA, announced positive results earlier this week from early-stage trials for its COVID-19 vaccine, which developedneutralizing antibodies in the bloodstream of all participants. UK scientists have also reported their own breakthrough. A trial for a COVID-19 vaccine being developed by researchers at Oxford University involving 5,000 volunteers is currently underway in Brazil. Pharmaceutical company AstraZeneca, LON, AZN, has also agreed to mass-produce the vaccine. The team is absolutely on track, David Carpenter, chair of the Berkshire Research Ethics Committee, told The Telegraph. If the vaccine is found to be effective, Carpenter predicts that it could be available as early as September, with investor sentiment boosted over hopes of an economic recovery in the near future. Gold price analysis, ZAO, USD bulls need to cross $1,802 to regain control. Confluence Detector gold prices consolidate Thursday's losses below $1,800 threshold during the early Friday's quiet session. The bullion snapped the 3-day winning streak with the heaviest decline since June 5 the previous day. However, the bears seem less convinced to even refresh the weekly low, which in turn teases bulls for re-entry. While searching for the options, our technical confluence indicator highlights $1,802 as immediate key resistance. The level comprises the middle band of the Bollinger on 1H formation, coupled with 200 HMA and a joint of 5-bar and 50-bar SMAs on the 4-hour play. Given the precious metals' clear break above $1,802, the 61.8% Fibonacci retracement and 200 SMA on 15M could test the bulls around $1,807. Though, the commodity's ability to cross $1,807 gives it a ticket to the multi-year high around $1,818. On the contrary, the previous low on 1H chart and the lower band of 15M Bollinger restricts the quote's immediate downside near $1,796. Should the bears keep the reins past $1,796, 61.8% Fibonacci retracement of 1 week, close to $1,789, hold the gate for the extended south run towards the previous month's top surrounding $1,786. Additionally, $1,780 should be considered as an extra filter to the south ahead of diverting the sellers towards the sub-$1,750 area. Gold erases weekly gain on dollar strength. Gold has surrendered weekly gains with a drop below $1,800. Dollar drew bids during the overnight trade on the back of upbeat U.S. data. The U.S. stock futures are now trade in the green and cap upside in the greenback. Gold is currently trading at $1,796 per ounce, having put in a session high of $1,800 a few minutes ago. The yellow metal fell 0.62% on Thursday to register its biggest daily loss since July 1. More importantly, with the drop below $1,800, gold has erased the weekly gain. Dollar strength weighs the American dollar, gold's biggest nemesis, picked up a bid on Thursday after the U.S. data showed consumer spending, as represented by retail sales, rose 7.5% in June. The dollar index, which tracks the value of the greenback against majors, ended the day with 0.27% gains. The greenback likely received an additional boost from the losses on Wall Street. The S&P 500 index fell 0.34% on Thursday, possibly on lingering virus concerns and tensions between the U.S. and China. However, the haven demand for the greenback may now weaken, as the futures tied to the S&P 500 are reporting a 0.30%. Moreover, the governor of the U.S. state of Texas rejected the rumor that the state was considering closure due to the rising number of virus cases. Even so, traders would be better off observing caution, as the Sino-U.S. tensions would escalate if Washington banks the Chinese app TikTok citing national security reasons. In that case, the S&P 500 futures will likely fall back into the red, boosting demand for the U.S. dollar. Gold quotes have been trading within an uptrend since the end of last month when they began to grow from the area of 1,687.5028. However, this week, the upward trend was interrupted, and the price is actively testing the reversal level of 1,812.5068, but cannot consolidate above it. After the consolidation, the instrument will continue to strengthen to the levels of 1,843.7578 and 1,875.0088 on the upper edge of the Murray trading range. The key bearish level is 1,781.2558, the middle line of Bollinger Bands. Its breakdown will give the prospect of a decline to the central level of the trading range 1,750.0048. Technical indicators do not give a clear signal. Bollinger Bands are still directed upward, confirming the presence of an uptrend. The MACD histogram has stabilized in the positive zone. Stochastic is directed horizontally. In general, the growth potential of quotes has not been exhausted since fundamental factors, the strengthening of shelter assets, the intensification of the COVID-19 epidemic in the United States, and the threat of a slowdown in the global economic recovery remain valid. Support and resistance levels, 1,812.50, 1,843.75, 1,875.00. Support levels, 1,781.25, 1,750.00, 1,718.75. Trading tips: long positions may be opened after consolidating above the level of 1,812.50 with the targets at 1,843.75, 1,875.00, and stop loss 1,789.00. Short positions may be opened after consolidation below the level of 1,781.25 with the targets at 1,750.00, 1,718.75, and stop loss around 1,805.00. Implementation period, 45 days.